Most adults pay taxes every year and still don't understand how they work. And that confusion is costing them thousands of dollars. Today, I'm going to explain taxes in simple terms so you can stop guessing and start saving money. Hi, special. My name is Linda, and welcome to Building Wealth with Wisdom and Purpose. In today's video, I will be talking about how the tax system really works. As a tax preparer, this is what I see every single year. I see hardworking people, business owners, nurses, parents, immigrants, and students losing money simply because no one ever taught them how taxes work. They overpay, they miss deduction, and they panic at tax season. My goal today is to change that for you. I want you to walk away with confidence. Why pay taxes? Let's start with the basics. When you pay taxes, your money usually goes into three places: the federal government, the state government, and sometimes the local government. Let's break this down. The federal taxes goes to the United States government, and they use this money to fund things like national defense, social security, Medicare, federal agencies, highway, and public programs. This is the biggest portion of most people's taxes. State and local taxes help to pay for public schools, road maintenance, police and fire departments, and public transportation. Not every state have state and local taxes. In a simple terms, taxes are how government operates. Whether you agree with how the money is spent or not, understanding how it works helps you, gives you power, and gives you peace of mind. How your income is taxed. Now let's talk about income. Not all income is taxed the same way. This is very important. There are three main types of income. 1, ordinary income. 2, self-employment income. 3, investment income. Now let's look at ordinary income. Ordinary income include your paycheck, your salary, the tips, the bonuses, the overtime you receive when you work for an employer. If you get W-2 from your job, this is considered ordinary income. Most employees fall into this particular category. 2, self-employment income. Self-employment income include side hustle, freelance work, Uber, DoorDash, online businesses, consulting, and contract work. If you get paid without taxes being taken out first, this is considered self-employment income. And this is taxed differently because you are responsible for paying all your taxes, not your employer. Number 3 is investment income. Investment income includes your dividends, your interest, stock profit, real estate profit, crypto gains, and this money is also taxed differently. Understanding which type of income you earn is the foundation of smart tax planning. Tax brackets. And many people believe this, that if they move into a higher tax bracket, all their money get taxed more. That is not true. The US tax system is progressive. That means that it works in layers. Think of it like a stairs. Each stairs have different rates. Only the money on that stairs gets taxed at that rate. For example, let's say you earn $60,000 per year. Your first $10,000 will be taxed at 10%. Your next $20,000 will be taxed at 12%. And your next or your last $30,000 will be taxed at 22%. So you know that not all your money are taxed at 22%, just the portion that falls within the 22% rate. This misunderstanding makes people to be afraid of getting raises or getting overtime because they think that when they work more, all their money will be taxed more. That is not true. Part 4, withholding and paying taxes. If you are a W-2 employee, your employer takes taxes out of your paycheck every time, and this is called withholding. They send this money to the IRS on your behalf. On the other hand, if you are self-employed, no one pay your taxes for you. You must pay the taxes for yourself. You usually pay these taxes every quarter, which means every 3 months you have to send some amount of money to the IRS for your taxes. And this is called estimated payment. This is why new freelancers or new 1099 workers panic at tax season, because they make a lot of money but they did not pay any tax in advance because nobody wants them. Now you know. Now let's talk about two powerful tools: deduction and credit. Deductions reduces your taxable income. It lowers the amount you pay as tax. For example, if you make 60,000 a year and you have 5,000 deductions, now your taxable income has reduced from 60 to 55,000. Credit, on the other hand, reduce the actual tax bill you pay. This is what we call dollar for dollar. For example, if you owe $2,000 and you have a credit of 1,000, now you only owe 1,000 to IRS. Credits are more powerful than deduction. Standard versus itemized deduction. Most people take the standard deduction and this is automatic. Some people itemize if they have high medical bills, mortgage interest, charitable giving. Like let's say you pay tithes to church, you can now go to your church and then deduct the money you pay for the year. A tax professional can help you decide whether the standard deduction or the itemized deduction will be the best option for you. So why do tax feel so overwhelming? Tax feels so overwhelming for 3 reasons. 1, the law changes often. The rules update every year. The tax law just changed for tax year 2025 and 2026. What worked last year may not work this year. 2, people were not taught. School barely teaches us about taxes, and families don't even talk about it. So most people just went through guessing how much they are going to make every year or whether they are going to owe or not. 3, people only think about taxes once a year, right? From January to April, and that is it. And sometimes by the time you think about it, it is too late for you to fix the mistake for that year. Knowing ahead of time will help you manage how much you're going to pay the IRS and whether you are going to get a refund or not. If you think this video was helpful, please like, comment, subscribe, and share this video with your friends and family. And thanks for watching. I will see you in my next video. Bye-bye.